The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Hello and welcome to another episode of the Zacks Rank Buys show. Flying solo today, so doing my own intro, doing my own talking. I'm Terry-less and I'll be carrying it by myself, but it's been a while since I talked to you guys. Of course, it's been a crazy couple of weeks with the holidays and also some crazy volatility in the stock market. As of today, Thursday, January 3rd, we're also seeing that volatility rear its head again. Obviously, Apple's profit warning and some weak data on the manufacturing indexes causing stocks to sell off again. But we're going to be talking about something completely different today. We're actually going to be taking a look at the sin stocks, if you will, two sin stocks in particular. I don't even really know how much that phrase is used these days. Sin stocks, I think, we just kind of think about them for what they are instead of lumping them into this own category. And also, I think a lot of people that are kind of interested in that space have been fixated on the cannabis stocks, which I guess we'll kind of talk about today as well. But, we're also focused on things like growth and things like income, especially here. So we're going to be looking at two specific dividend-paying sin stocks, if you will. One that deals with tobacco, one that is a tobacco company, and another that is in the alcohol distribution business. So let's go ahead and start with the tobacco company, and that company is called Vector Group. It trades under the ticker VGR. First things first here, it's actually not a pure sin stock, if you will. So it owns a tobacco subsidiary that is the largest or the fourth largest cigarette maker in the U.S. and really focuses on the discount cigarette market. It does, however, have diversified operations. It owns a real estate development company called New Valley LLC, which is as I said, real estate development, and also used to own 70% of a company called Douglas Elliman Realty. Actually just bought the rest of that company this very week, and that company is the fourth largest residential brokerage firm in the U.S. So kind of a weird mix of a company. It has this tobacco business, big tobacco business, and then it also has this big real estate business as well. So that'll factor into some of the things we talk about in terms of valuation. Let's go ahead and dig into the stock a little bit more now. The first thing we're going to look at is the price and consensus chart. We typically look at these in the 5-year view, and you're probably used to seeing it on Zacks.com. This is a different format, and this is a 1-year view. I think this just makes it a little bit easier to see the most recent trends. And as we can see here, been a really, really tough year for the stock in terms of just the share price coming all the way down from $21 a share to below $10 a share where it's sitting now. We've seen a little bit of life after the market seemed to find a bottom in mid-December. We'll see if that bottom holds, of course, with these new factors on everyone's mind. And part of that life, I think, probably has to do with the reaction to this increase in the EPS consensus. I do want to note, this is the dark blue line here is the consensus for 2018. We do have a bit of a data glitch here sending it up to the consensus for 2019. That's actually incorrect. Our consensus on Zacks.com is here at 52 cents, which is up from where it was just a few months ago here down below 45 cents. We are looking for growth from 2018 to 2019, so that's a good thing. The 2018 consensus, though, is an earnings retraction. So, the growth prospects on this is certainly not a high-flying growth stock, if you will, and it's really, really struggled to gain any momentum this year, although we have seen a bit of an uptick in the 2018 consensus, and that fiscal year is, of course, wrapping up here soon. What does this look like in actuality? What does the line translate to in terms of actual estimates? Well, that's where, again, it becomes a little bit less convincing because, as you can see, we only have one estimate on that consensus, and the uptick in the consensus is coming on just one revision, of course. Again, as I mentioned, earnings retraction here for the full year expected. Growth of nearly 31% from this year into next year, though, so that's a bit of a positive. With just one analyst here on the estimate and just one revision, the word I want to use is unconvincing. And then that brings us into the valuation. So as you can see, Zacks labels this as a tobacco company, so we're comparing it to other tobacco stocks. But I think that's tricky with the valuation because of the business, the exposure that the business has to the real estate market. It's not a pure tobacco company. And so what that means is I'm not surprised that the valuation here is so different from what we see from the broader tobacco market. Here's what I will say, though. Except for this little uptick here, and mind that glitch a little bit. So we're actually down here. We're at the cheapest that you've been able to get this stock all year. But typically you want to see when you're looking for value, when you're looking for a value stock, you want to see some sort of positive in terms of an uptick in the earnings consensus, which we've just barely seen for the current year. And you want to see any sign that the stock can gain any sort of footing. At some point, yes, a stock that has come down 50% over the past year does have a value case, but at what point do you just want to avoid a stock that has seen no momentum whatsoever? And so with that, I think, again, the word I've come back to on really all three of these charts we've looked at for Vector Group is unconvincing. And I think the theme of this episode is going to be yes, but. So unconvincing trends in earnings, share price momentum, and valuation. But it's a big dividend payer, and we're talking about a $1.60 per share annualized dividend that comes out to a 16% annualized dividend yield right now. So, yes, but wow, that's a nice payout. They've been paying that 40 cents per quarter payout for several years now, so it seems to be relatively consistent and might be a good way to generate some cash flow. Trading at under $10 a share too, relatively low price. You can scoop up a bunch of shares. So yes, but on Vector Group. And that's kind of what we're going to get to on their next company, which, as I mentioned, is in the alcohol business. It's Constellation Brands. It's one of the biggest beer companies in the world. It's actually the largest beer import company by sales and has the third largest market share of all major beer suppliers at 7.4%. This is Corona, Modelo. It also has some liquor and spirits exposure. It owns Svedka vodka, to name one. Let's go ahead and take a look at the price and consensus chart. Also just been a tough year for the stock in terms of gaining any momentum. It's a little bit better of a chart than we saw for Vector Group, just kind of seesawing up and down for several months here and doing relatively nothing. But we see a general decline in the earnings consensus, and that has really hurt the stock, especially as the broader market started selling off here in the last couple of months. These earnings trends take a while to develop, and sometimes it takes a while for the relationship between share prices and earnings estimates to really show itself. But, overall, we can see earnings estimates for 2018, 2019, and 2020 have come down over the course of this year, and that has not helped the stock. Looking at what these estimates actually are, this stock a little bit tracked a little bit further than the Vector Group. A few more estimates, few more revisions here. We've got 4 negative revisions within the last 60 days for the full year consensus, which is ending in February of this year. 1 positive revision, though, maybe some hope there. Looking into the next fiscal year, 2020, 3 negative revisions, and as we can see, that's brought the Zacks consensus estimate down. Not too crazy. I mean, we're actually up a penny from where we were 90 days ago here for the current fiscal year, down from the highs, and we are down here for 2020. So again, coming back to that word, unconvincing. Not the worst revision trend I've ever seen. Certainly not the best. Certainly not what we look for. The valuation picture, though, is a little bit better here, and that's, I think, going to be my yes but for Constellation Brands. We're now trading at a discount, a significant discount to the broader alcohol market at 16.5% or 16.5 times forward 12-month earnings, around the lowest valuation you've been able to get Constellation Brands for in the past year, right on that low. So that would be my yes but, is the valuation picture looks a little bit better here because there's also a big opportunity for long-term growth. So that's what I was saying earlier about value stocks, is you want to have something that also supports your value argument besides just the PE number. You want to have some faith that the stock is going to be able to generate, the company's going to be able to generate some growth, and that brings me to, of course, Constellation Brands with a 38% stake in Canopy Growth, the Canadian cannabis company. That, I think, is, you know, if you're trying to make a bull case for Constellation Brands, you say, look, it's trading really cheap right now, and 3, 4, 5 years from now, that Canopy Growth business could be huge for it. So that would be my yes but for Constellation Brands. So those are the two SIN stocks that I wanted to take a look at there. Again, Vector Group, ticker VGR, and Constellation Brands, ticker STZ. Good check in there. And I should mention also, Constellation Brands is a dividend-paying stock, 1.8% annualized yield right now. So you get some income from both of these companies, and they could be on your radar as income-interested investors. But that's going to do it for us today. Thank you for tuning in to another episode of the Zacks Rank Buys. We'll see you next time.